Welcome back to the podcast. Don't forget to go to the website at retireyoungaudio.com and leave us a comment. Also, subscribe to the Retire Young podcast at Apple Podcasts, iHeartRadio, and Spotify. If you're just tuning in, Al was shedding some light on these financial markets and how these other leveraged asset classes trade and invest as far as the futures market, the Forex market, and the options market. And Al, as we got into kind of end of that last segment, we kind of talked about shorting. And institutions are participating in up and down markets. Now, the term for when institutions profit in down markets is called shorting. Explain what that is, because a lot of investors, they maybe have heard of it, but don't know the mechanics of it and how that really works.
Right. Well, it's a concept that for a lot of people is hard to understand because it almost seems like it is illegal. You mentioned institutions use this, and they know that the markets are going to be down maybe 40% of the time, not always up. So they want to participate and make sure that on a consistent basis they are having the opportunity to be profitable. Shorting is simply a concept where you are borrowing something you don't own. Let's use an example of IBM. You think IBM is going to go down in value. An investor can borrow it from their broker, sell it on the open market with the intent of buying it back at a lower price. Since you've borrowed it, you have to return it, and the goal would be to buy it back at a lower price. The difference between what you sold it for and what is purchased for, that is an investor's profit. That's shorting. You have an obligation to return something that has been borrowed, but some stocks are not shortable. It depends on kind of the liquidity, the amount of volume that's there. But most brokers will give investors and traders the opportunity to do that. Institutions are doing it. And by the way, it's only one way of making money in a down market. There are other ways to do that.
Now, that sounds a little complicated, though, because you're borrowing something you don't own.
Correct.
But just to make it a little bit simpler, I mean, trading and investing is all it's all electronic now. Mm-hmm. And you place a buy, you place a sell. It's just a click of a button on a platform. If you want to buy, you click the buy button. If you want to sell first, you just click the sell button. And then it closes by clicking the buy or the sell afterwards. So it's just the opposite.
It's a simple process, and those are the things that should be covered in an educational program. But a lot of people think that these things are complicated, and that's one of the reasons that they don't get involved. People have, I think, a misconception or perception of what a trader's life is like and what having the ability or the skills to use the different assets are. Those are the things that in these free classes that you're talking about, this is a great way to find out if this is something that is right for you.
And really just to see why the institutions are doing what they do.
Correct. And if you believe that the institutions are successful, wouldn't it be of value to learn what they're doing, learn why they do it, and then maybe learn how to follow what they're doing? And they're making money in up markets, down markets. But another important thing for them, in addition to increasing their probabilities of being successful by taking advantage of different market conditions, protection of what they have is huge. And that should be for anybody who is going to be involved in any kind of financial transaction. Understand what the risks are and then manage that. And don't look at risk as being a negative or a scary thing. It's just something that you need to learn how to manage.
Now, with the retirement side of things, a lot of investors and a lot of our listeners have 401ks, IRAs.
Correct.
Now, the institutions are managing their risk in these different accounts as far as what they have. Now, let's talk about the 401k. Who typically has 401ks, and what are some of the opportunities or the options people have in these? I mean, it's typically work-sponsored plans.
Correct. That's what a 401k is. It is a plan provided by an employer for their employees, and it really was a replacement for pension plans, which used to be kind of the go-to retirement program. Now, 401ks give the employer the opportunity to transfer the responsibility of the retirement program to the actual employee themselves. So you become your own pension fund manager. And typically the choices within 401ks, we're talking not just about a 401k, but 403bs, TSPs, all of the employer-sponsored retirement plans. And the choices typically are very limited. Usually they're mutual funds. Some now will allow the employee to invest in ETFs, which is an exchange traded fund, or individual stocks. But for the most part, it's mutual funds, which carry high fees and also have had a record of mediocre returns.
And now that's the downfall of those is there's a lot of fees that come along with those. I want you to talk about those fees coming up here, but we have a lot of investors that want to see what the institutions are really doing with their retirement accounts, their 401ks, 403bs, TSPs, everything that's going on, even pension plans. I mean, a lot of investors don't know what's happening with their pension plans.
A lot of them don't have one anymore.
Exactly, yeah. Maybe Union, that's about it. Al, let's get into these fees because if you have a broker or an advisor, they're going to tell you, okay, we're going to give you, we're going to manage your money, essentially hold your money, and we're going to charge you a 0.75 management fee, and which sounds pretty good, right? Well, there's other fees that come along with it. Let's talk about the mutual fund fees. I mean, there's fees on top of other fees as well.
Sure. There's administrative fees, legal fees, distribution fees, marketing fees. A lot of those are never really exposed to the employee. I think I have read that our government has said there can be as many as 17 different fees within a 401k. And that can have a huge impact on the returns that you get. If you're looking at holding a portfolio like this for 20 or 30 or 40 years, which for many people is what happens, and you look at maybe a 2% or 3% or 4% fee taken out, and that's, there are a couple of fees that, in addition to the 401k fee, there's a fee that the sponsor charges just to kind of hold that program, portfolio.
Doesn't that fee compound as well in a negative way?
In a negative way, because every dollar that is taken away is no longer compounding for someone, and the end result is significant over time. It could cost as much as 30 or 40, or in some cases maybe even 50% of what you could have in a retirement plan, and that's a huge amount. Because think about it. What is maybe the most important thing that people have to rely on when they retire? It's probably the biggest asset that people have, maybe in addition to their home. That's their 401k or 403b or TSP.
Yeah.
And very few people really pay enough attention to it to get the maximum value out of it, that the potential that is there. A lot of people, and we ask people this when they come into these classes, what's in your 401ks? Who makes the decision to either make the initial investment or make any changes? Typically, it's the employee themselves, the retiree themselves, and they, in many cases, don't really know what the individual mutual funds, for example, are invested in. Oftentimes, they'll find that they have maybe 5 or 6 or 7 or 8 different mutual funds, all of which basically do the same thing, have many of the same holdings. So the diversification really isn't there like they think they have because they have more than one mutual fund.
I want to just reiterate what you said there. We meet with a lot of people, and one of the common themes that we see when people come into these investing classes, people think they're not investors, which is totally fine, but they're invested in the market with their retirement. So technically, people that have 401ks, they are investors.
Absolutely.
Right? So
absolutely.
You said most people don't pay attention to those accounts. Why is that?
I think it's just the fact that the people believe that every dollar that is taken out of their paycheck that goes into this retirement plan is just going to keep building for them. People have I guess we've kind of been trained to believe that the market is always going to go up. There's always going to be something that will help boost the market up. And, and for the most case, that is true. Right now, we're seeing the Fed doing that by pumping trillions of dollars into the economy.
They call that the Fed bubble.
The Fed bubble. It's what caused the big move up from the recession back in 2009. And people just have that perception that things are always going to continue to go up, and they rely on something or somebody there to keep boosting it up. That may be the case, and over time, you're probably going to find that the value of your retirement accounts go up.
So if all
but
this
the point is, are people missing out on the opportunity to have better returns or to have protection? Because protection is huge. When you go into, let's say that somebody retired in the year 2008, and then that was followed by a 57% reduction in the S&P 500. If somebody retired in 2008, that could have a huge negative impact on the quality of their retirement life.
It does. And now think about this. I mean, the markets will go up over time, but and things are looking pretty good for a lot of people, but we still have a retirement crisis, and it's unfortunate. But the problem is there's so many fees that's coming out of people's investors' accounts that they don't even know it. Part of it is because they don't pay attention. Another part is they're very hard to understand. You almost have to be an attorney to read these. Yep. So we have a lot of people that want to understand what their 401k is. What is in their 401k? How does it function? What are some of the fees in there? Al, these shows go by so fast, and we still have a lot more to cover in this last segment. One of the big things I want to get into is continue this discussion on retirement, but within the self-directed IRA. We have a lot of investors who want to be able to understand how the IRA works, but how you can manage that yourself. Thanks for listening. Don't forget to check out the website at retireyoungaudio.com and leave us a comment.